With the top story of the day, in a surprising move, the RBI's Monetary Policy Committee decided to cut the key policy rates by 25 basis points. This was the first policy decision under Governor Shaktikanta and the first rate cut since August 2017. Now, 4 members of the committee voted in favour of the rate cut, including the new governor and the usually hawkish executive director at RBI, Michael Patra. Deputy Governor Veeral Acharya and MPC member Chetan Ghate voted to a status quo. However, the MPC voted unanimously to change the policy stance from calibrated tightening to neutral. The main reason for the rate cut is the RBI's benign inflation outlook. According to the central bank, prices of food items continue to surprise on the downside, and even electricity prices are showing moderation. So, the inflation forecast for the first half of the upcoming financial year has seen a sharp cut from around 4% levels to just above 3% levels. The RBI expects the economy to grow at 7.4% in FY20. It expects growth to remain just over 7% in the first half and then accelerate to 7.5% by the end of this year. However, the central bank did raise a lot of red flags. Governor Shaktikanta pointed to a slowdown in investment demand in the third quarter of this financial year. He also underlined that credit flow is slowing and that there is moderation of activity even as is in the services sector. On agriculture, the governor said that Rabi sowing has been tepid and he expects total farm output to decelerate in FY19. Here are the key highlights from the governor's press conference after his monetary policy debut.
The shift in stance of monetary policy from calibrated tightening to neutral also provides flexibility and the room to address the challenges to sustain growth of Indian economy over coming months, as long as the inflation outlook remains benign. The decisions of MPC in this regard will be data-driven and in consonance with the primary objective of monetary policy to maintain price stability while keeping in mind the objective of growth. More recent high-frequency indicators point to investment demand losing some pace in the third quarter of 2018-19, while credit flows to industry remain muted. Survey-based indicators point to weakening of demand conditions in the manufacturing sector. High-frequency indicators of services sector suggest some moderation in the pace of activity.
It was volatility of trade on the last street. In afternoon trade, the markets recovered from the day's lows on account of the Monetary Policy Committee's decision to cut rates by 25 basis points. However, the Sensex and the Nifty gave up their gains and went back into negative territory in the last hour of trade to finally end the day absolutely flat. In the broader markets, the Nifty Bank followed suit to end mildly in the red. However, the mid-caps had a strong day and outperformed the benchmarks to end the day over 0.5% in the green. Now, following the RBI's repo rate cut, the rupee has strengthened more than 11 paise and is now trading at the 71.3 against the greenback. This despite the dollar trading stronger versus a basket of other major currencies. The rupee had weakened to 71.73 ahead of the RBI's interest rate decision earlier. But, it's not just the rupee. Sovereign bonds also rallied following the Reserve Bank's unexpected rate cut. So the yield on the 2028 bond has fallen to 7.49% from 7.57% just before the RBI decision. Now, here is HDFC's Deepak Parekh on the RBI's policy and what it means for the economy.
The rates were already low. The margins had been really squeezed. Yeah. And with the with non-performing loans shaping up and coming up, I think banks and NBFCs need to keep a larger margin for protection. So it's not possible for, because of heavy competition, the rates were wafer thin. Yeah. And these kinds of wafer thin margins are just not viable today because stressed assets come up anytime and you need larger profits to make provisions for. So part of it, the rate may be passed on, part of it is already factored in.
All right, there was an exclusive interview with Deepak Parekh and we'll try to get you more of that a little later in the day. For now, we will have to end the show. Thank you for watching. Stay tuned. Markets Today Talkback is up next.